does take us to our talk of the tape. Where do we go from here with all this volatility? Where are we going? Let's ask Tom Lee. He is FundStrat's managing partner, head of research, also a CNBC contributor with me here at Post 9. Thank you for being here. So, Liberation Day didn't go as you thought, and you apologized publicly for that, which I think a lot of people appreciated. You're always a stand-up person about that. What now? Where are we going?
Well, I think a couple of things that we're thinking about is we know markets have gotten very pessimistic. They've priced in a 60% probability of a recession. And if tariff negotiations de-escalate, then the probability isn't that high. So I think that there's still a big window for markets to have a large rebound, but it's really the path of this de-escalation.
Are we in a bear market? I mean, we're in a bear market, right? I mean, it almost doesn't matter, textbook, whether you say we are or not. It's like so many stocks got just absolutely destroyed before this uncertainty happened in the market.
Yes. I mean, if we define a bear market as stocks feel like a grind or you're losing money, I'd say it really started in December because markets were churning even through the February high. But if I was to define a bear market as unleashing a type of financial tightening that leads to a recession, we're not at that criteria yet. But I think it feels like a bear market for the average person.
Are we supposed to buy into that or just stay cautious and on the sidelines, don't do anything, sit on our hands? I don't think people know what to do. And I'm not just talking in the CEO suites because they obviously don't know what to do. How can you? So what is the investor supposed to do? Yeah,
I mean, I think there's sort of two brains people are fighting. One is the tactical brain, which is, look, they want to know if this is a bottom, and they want to be convinced of it by seeing stocks rally on bad news. But if someone had the investor hat on, and that's the long-term brain, I have a lot of confidence the U.S. companies are going to navigate through this treachery. Stocks are hugely oversold because you never really lose money buying the VIX at 50. Or when the percentage of stocks above the 200-day drops to 15, those are almost guarantees of positive 1-year, 3-year, 5-year returns. So it depends which brain you're wearing today, but I'd say the majority of our clients are trying to be tactical.
I hear views of, well, it's really hard to get uber bearish now because a headline at any moment, as I said in the open here, the market is waiting so hard for some bit of good news that if you're on the wrong side of that, you get a day like you had on Wednesday.
Yes. I mean, if I was to oversimplify the framing of this, U.S. and China have absurd levels of reciprocal tariffs at the moment. And if you believe those are in place, then the global economy is in trouble and you should be bearish. But if this is a matter of who makes the overture first or blinks, but we know it de-escalates, then I think the downside has it comes off dramatically, and I think stocks can actually do really well into the rest of the year.
So you'd be a buyer right now?
Yes, and with the apology that, of course, I didn't think Liberation Day was going to be this draconian, but yes, I would be buying stocks today.
What would you buy?
Well, one of the things we did for our clients last night is to look at what's called Walter Deemer calls sold out stocks, which is worse than oversold. Sold out stocks don't go down because there's a lot of bad news priced in. Mm-hmm. There's a lot of stocks that didn't make new lows on Tuesday, April 8th. They made their lows a month ago, and they had lower volume on April 8th. Those are what I'd call washed out stocks. A group that I think is washed out is the Mag 7. So I'd look at Mag 7 as a place to really expect a rebound, including stocks like Tesla.
Okay.
Step into the whirlwind world of the stock market where Nvidia resides, a captivating journey filled with twists and turns. From the intense fluctuations in AI spending to the geopolitical rollercoaster of tariffs, Nvidia shares have been on a wild ride this year. As the stock dipped 28% from its peak to $110.93, the trading community buzzed with excitement. Welcome back, everyone, to Investocracy.
You used the word draconian. That was your word. But I'm going to play off of that and say, well, what if we're in a post-draconian period where, because of that, we're left with the rubble of that decision-making in the White House? And the damage has been done. CEOs have no visibility whatsoever. Do you see this consumer sentiment number today?
Yeah, they're awful.
Do you see where inflation expectations are?
Yeah, they've gone bananas.
Do you see what earnings expectations have done recently?
I mean, there's no ability to make guidance.
So what if the damage is already done now?
That's right. Now, we have to keep in mind this has been 10 days. So it is a shock, a high-amplitude shock, but only of 7 days, so someone can restart the patient's heartbeat. I think that the White House is now keenly aware that Main Street can't handle a huge deleveraging because it is going to lead to job loss, and he's listening to CEOs. So I think there's a really big window to repair the bulk of this damage. And at the other side of this, of course, is that we have reciprocal tariffs in place that are acceptable. We have tax policy that's changing and less regulation. So I actually think the 2026 outlook is still quite good.
Which puts are you, so to speak, more reliant on now, a Fed one or a Trump one?
Well, I think there's a call at work and a couple of puts. I think that there is a Fed liquidity put that was in evidence today by the Fed.
When Collins said what she did?
Exactly. And we know the Fed put on rates strikes much lower. The White House has a policy put because we know that you can't brinksmanship the global economy to a halt just to try to get China to blink. And I think that the call is, I think there's a negotiator call, which means I think the White House exercised the Navarro call and replaced him with Besson.
Embark on a journey through the unpredictable terrain of the stock market, where even the most experienced investors can find themselves spinning. Picture this: a group of traders discussing Nvidia's fortunes, and one daring soul quips, investing in stocks is like playing a violin solo in public and learning the instrument as one goes along. Thrilling and nerve-wracking. Laughter ensues, breaking the tension of analyzing market trends. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Yesterday, but where does that leave us? Because a lot of those huge one-day rallies have happened in bear markets.
Yeah, I agree. I mean, investors, I think, were fearful we were being pushed into the abyss of a depression. And there's a lot of technical damage that isn't necessarily fixed by just having a one-day rally. So I think that investors are understandably cautious. But one thing that my friend Tom DeMark likes to call is washed out markets. Yep. And I think some things really got washed out, and that's what we're going to keep an eye on. I think it's actually kind of constructive. Like the Teslas and the Mag 7, they basically bottomed on Monday. Yeah. And so even though the markets were plumbing new lows into Wednesday, they were holding up, and they've made a big move. So I think there's an argument to me that high beta and the Mag 7 are what you want to watch. And I'm kind of in the camp that this is going to extend further, the rally.
So, I mean, you were bullish going into this whole thing, right?
Yes.
I think everybody did not expect it to be so severe. After yesterday, how much changes fundamentally around your bullishness? Because it's great that he paused on all the other countries, but as we mentioned, we are still going to have to face a lot of tariffs, and that could hurt growth.
Yeah, I think the upside case for stocks is impaired, right? Because the Fed has made clear during the midst of this that for the Fed put, it really isn't in play until they have a better idea of inflation. I mean, we just heard that again. So I think markets then have to depend on fundamentals and then a policy path from the White House that they can't necessarily depend on. So I think
delve deeper into the Nvidia saga, where every data point tells a story. Sift through the tweets like a detective unraveling clues, each one shedding light on the company's trajectory. Survey the landscape of articles, connecting the dots between topics to unveil a cohesive narrative that captures the essence of Nvidia's market upheavals. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I think companies aren't going to get hit as hard as we initially thought. For instance, even looking at these revised tariff rates, to me, there's still the ceiling. So even if this is what's in place now for 90 days, I think there's a chance things could still improve from there. And of course, it could be better for U.S. companies, and there could be concessions made for U.S. businesses. So do I think stocks, do I think stocks are an easy road from here? No, I think it's going to be very challenging. But again, I think so many things got washed out. I think the Mag 7 especially, that's where you're going to find opportunity.
You do. All right, the Fed put may not be there, but what about the Trump put? Is it back?
It's in the bond market.
And can you rely on it?
Well, it's got a different variation, right? Because it is driven by instinct. So there's not a level that's going to make a difference, or how close to recession do we get? So
we don't have a handle on the reaction function, as we would say with the Fed. Yeah,
that's right. It's like it's a blunt instrument that we don't know where it strikes.
Right.
But at the end of the day, I know U.S. companies are going to be very innovative. I mean, for instance, if they have higher import costs, they're not just going to pay higher import costs. They're going to be very innovative on cutting costs, which just means AI spending should be a lot higher and automation spending. So, I mean, it's actually good for tech over the next 12 months.
We could see a reduction in employment, though, right?
Yeah. I'd say, that also, again, acts as a stabilizer, because to the extent that Main Street jobs get lost, I'm not sure then we can say that these policies are good for me.
As we draw the curtains on this captivating chapter of NVIDIA's tale, one cannot help but feel the pulse of anticipation. The stock, standing at a crossroads of potential growth, beckons investors with promises of lucrative returns. But what do you think? Share your thoughts down below. Finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.